Hello to everybody, FutureTrend channel is glad to welcome all of our subscribers. Today is 25th of May 2018. An interesting fact that we have already 6 consecutive weeks of dollar strength starting from the middle of April. Especially it's clear picture. We could see that on an example of the euro dollar, which plummeted from the highs of 124, approximately 124, which was the level of middle of April, 19 of April, and now we are trading around 117.10, and during the day of yesterday even plummeted the lows of 116.75. So, taking into account that ahead of us is a long kind of weekend because of United States holidays, probably somebody could argue for a correction in the dollar price, for a correction of dollar strength. But really the situation is not so encouraging for the dollar bears right now, because if we take into consideration the technical position, for example, of the euro dollar, here the pressure is still on the downside, and next technical barrier to watch is located around 115.50, the lows of November 2017. Of course, there is some other factors that could stimulate further euro weakness. The factors, for example, political one. As you know, in Italy, the far-right league still insisting that economy minister in a new in the new forming Italian government should be appointed a Eurosceptic kind of politic. From that point of view, of course, the euro dollar has some other negative factors that could stimulate its further weakness. Also, from a technical point of view, the euro dollar it looks rather weak, and to improve the picture even from a short-term point of view, it should initially break above 117.90, the level of a current downtrend. As regarding the other currencies, the dollar yen still under the kind of short-term downside pressure because of rising geopolitical tensions between the United States and North Korea, but here the situation is also not so clear for the dollar yen, because from one point of view, from technical point of view, the pair is trading below its moving average 200 daily line that's located at 110.18. Also, we are trading below previously broken uptrend line of 2018. All in all, probably dollar yen should extend further to the downside. But of course, here the situation will also depend on the situation between the North Korea and the United States. Anyway, what about us? We still keep our short trade recommendation initiated yesterday at 110.22, and we still keep it for a possible undershooting of the level of 108, where we see another important barrier, another important support to the downside. Sterling, despite of the fact that yesterday we had a first of promising economic numbers coming from the UK, you know that retail sales report was better than expected. Despite of that, and despite of the small rebound to the upside, the cable reached the highs of 134.22 approximately. But as you know, yesterday it was plummeted to the lows of 133.05. Here the situation is still rather bearish for the cable, and from that point of view we even could see some lower levels, because a break below the recent lows of 133.05 should open at least possibility to retest major support zone around 133.20, 133. As regarding the dollar Swiss, here the situation of course still depends on the strength of the Swiss franc currency because of Italian policy as well as geopolitical tensions. But of course the number one story is the story of Italian politics. And from that point of view, the strength of the Swiss franc on the crosses should stimulate the dollar Swiss to extend its current decline, corrective in nature once again, probably to the level of 0.9825, 0.9830, where lies 2018 uptrend line. Only in case of a stronger closing below that line, we could expect some lower levels for the dollar Swiss. We still keep our short rate recommendation initiated at 10045, and we still expect and will close our position in case of undershooting the level of 9830. Thank you very much for all of your attention. Some later we will come with our analysis of euro crosses and commodity currencies. Bye bye for now.